Hey guys, this is me Rahul, and in this video we will discuss that how the Silicon Valley Bank collapsed and what are the possible major implications our Indian bank can face. Will it affect our market? Cause in recent days we are continuously making a new low on every day, and if you are also having some midterm positions, then you know well that Nifty has given almost 1% return in previous 1 year. So let's discuss how this collapse happened. We all know that Silicon Valley Bank had specialized in financing startups and had become one of the largest bank in US by asset size. At the end of 2022, you will be surprised to know that it had 209 billion in assets and about 175.4 billion in deposits. So the question here is how and why it happened. Well, Silicon Valley Bank was hit hard by the downturn in technology stocks over the past year, as well as Fed's aggressive plan to increase interest rate to control US inflation. The bank bought billions of dollars of worth of bonds over the past couple of years, using customers' deposit as a typical bank would normally operate, and these investments are typically safe. But the value of those investments fell because they paid lower interest rates than what a comparable bond would pay if issued in today's higher interest rate environment. Okay. Usually that's not an issue because bank hold onto this for a long time unless they have to sell them in an emergency. But Silicon Valley's customers were largely startups and other tech-centric companies that started becoming needier for cash over the past year. Venture capital funding was drying up, companies were not able to get additional round of funding for unprofitable businesses, and therefore they had to tap their existing funds. So Silicon Valley customers started withdrawing their deposits. At first, that wasn't a huge issue, but the withdrawal started requiring the bank to start selling its own assets to meet customers' withdrawal requests. And to fulfill these requirements, this bank required selling typically safe bonds at a loss, and these losses added up to the point that Silicon Valley Bank became effectively insolvent. The bank tried to raise additional capital through outside investors but was unable to find them. Bank regulators had no other choice but to seize Silicon Valley Bank assets to protect assets and deposit still remaining at the bank. Hopefully, HSBC has acquired this bank and they are resuming normal operations from now on. At this moment, we cannot expect there to be any spreading to the broader banking sector. If you talk about Indian banks, then one thing is very sure that our Indian banks are far more diversified across multiple industries, customer base and geographies. However, there might be economic ripple effect, especially in small businesses of US because that Fed rate hike, okay, and it will lead to economic slowdown, and we all know that US market is the mother of all market, so the rest is all about to wait and watch. Please do not buy aggressively in this volatile market and do not sell your good holdings in fear of this volatile market. Got it?